You're listening to the Security Matters podcast. I'm David Puner, a senior editorial manager at CyberArk, the global leader in identity security. You get a request to pull a laptop off the network. Routine stuff. But the pushback is immediate and oddly defensive. That's the clue. You press harder. Turns out, the machine was quietly leaking sensitive financial data. No alerts, just a reaction that felt off, and the thread that unraveled an insider theft. Just like people, machines leave trails, but unlike people, they multiply fast and often go unnoticed. In financial services, risk often hides in these subtle tells. And while you're catching those signals, machine identities like service accounts, APIs, and bots are multiplying fast. Manual processes lag. Reactive playbooks break at trading floor speed. Add agentic AI, autonomous systems acting on their own, and suddenly, identities aren't background. They're first-class citizens. And they demand ownership, governance, and control. Our guest today, Andy Parsons, has lived this reality end-to-end. He's CyberArk's Director of EMEA Financial Services and Insurance. He's also a former CIO, CTO, and CISO across global banks. And before that, he spent 15 years in the British Army, honing discipline and mission focus. From trading floors to boardrooms, he's led through insider threats, outages, and the high-stakes reality of moving trillions every day. This is Security Matters. Let's dive in. Andy Parsons, CyberArk's Director of EMEA Financial Services and Insurance. Welcome to the podcast. Thanks for coming on.
David, thank you.
Great to have you here, Andy. Where are you sitting? Are you in England?
Yeah, so home is just north of London. Yeah, London's quite a big city, but north of London, outside into the countryside. End of the day for me today, middle of the day for you. So
yes, and thank you for joining us at the end of your day. Your career spans decades in financial technology and cybersecurity, from the trading floor to the boardroom, and you've been a CIO, a CTO, and a CISO. And before all that, you spent 15 years in the British Army. How has that experience shaped your perspective on leadership and risk? And how have you seen the role of cybersecurity evolve in financial institutions over the years?
When you say it like that, it just makes me sound really old, but I think amazing opportunity to have been able to have two really good careers. And I think there's so many similarities in that. But I think, that time in the military teaches you to think systematically about risk. So if you think about the life of someone in the military, that your whole purpose is defense and getting into situations that provide that safety. So I think a lot of my time, a lot of what I've been doing in the forefront of that is around people decisions and looking at operational security in the larger context. But most of all, it's that instilled discipline around establishing processes, doing the right thing, documenting what you're doing, making sure you're not leaving any stone unturned in terms of vulnerability. So along that journey is a kind of easy transition to get from sort of military into the world of technology, security, and everything that comes with that. In the military, British military, we talk about the ethos of train hard, fight easy. So a lot of what I've found myself doing over my career is just constantly practicing, constantly asking those difficult questions of, what could go wrong? Like, what are those extreme but plausible scenarios that we can all sit around a table and poke at and look at and say, why would it work that way? Why would we let someone do that? What are the risks? What could go wrong? What are the scenarios? And the military is very good at preparing you for the unknown and helping you figure out your own leadership style, how you manage people, how you manage crisis. But I think coming back to some of the similarities around, I look at today, in the role today as a CIO, CTO, C-suite in a bank, you've got sort of three dimensions. You're looking at the legacy that you're trying to manage, the today and everything around today and the urgency. And you've also got to learn to have one eye on the future and think about what are those what if situations. So I think that's very good. You become mission focused. You have resource constraints in both sides of those types of jobs. You have to do team development and manage, build high performing teams, which is the cool part. And then you've got to kind of manage the poor performers, which in most cases takes up more time than you would like to.
Mm-hmm.
In amongst all of that, it is about managing risk. And if you work in financial services, you are going to be managing risk every day. Can I open the business? Can I trade? Can I execute day in, day out? And now 24/7, because that's what me and you expect from our banking systems.
Over the course of your career, you've held leadership roles during some challenging moments in financial cybersecurity. Is there a key lesson or two that you've learned that shaped your approach to security today?
Yeah, absolutely. I mean, back to that point around every day you are managing risks. You're managing huge schedules of change, investments that sometimes won't work, sometimes don't work. Originally, when I started, we talked about and we thought about systems risk. And actually, if you roll the clock forward, we're now talking about operational risk and organizational risk and systems risk. And you've got to look across those three dimensions. And the massive shift, I think more recently, that shift from primarily human focused identity concerns to, where we are today, where those ratios are, 82-1 in terms of machine to human identity. But I think the key lessons, and there are many, I could not stop at three, but I think if I was to choose three, I would say you can't secure what you can't see. It sounds really easy, military thinking in here as well. So discovery, I've always talked about situational awareness. So what are the data flows? What are those APIs? What data is moving around your organization? Data is the lifeblood of financial services. The points here around, you can't secure what you can't see. Reactive approaches, in my experience, they normally fail when you get to scale. So manual touch points, if I go back 20 plus years, one of the questions I would often ask teams when I joined a new part of the organization, and I've been lucky, I've worked for tier one banks all the way through to fintechs and startups, but you go to those big businesses and say, okay, what is the process to add or remove a naught from an account? Talk me through it. Get the pen out. Let's get on the board. And you start learning just quite how much manual touch points exist. So I think finding ways to make sure that you have got a more strategic way of dealing with that. Manual processes don't scale with modern AI machine identity. And I'll give you a good example, in a role I was in the last few years, a core banking system that runs 20% of the world's economy, a couple of $1 trillion of accounting flow per day. And you're running with 25,000 batches per night. You cannot manage that as a human and spot it. So we need to see how we manage that differently. And the lessons learned are, those touch points are really what slow you down. I think the last thing in terms of lessons learned is watch for the reaction. I've seen people tend to give away responses to decisions when you push, and certainly when they're out of sync. And I've been here many a times, just look for the reaction. An example I give you is, I've been in a business that's gone through a data theft.
Mm-hmm.
And that was a criminal act. It was an insider.
And is this when you were a CISO?
Yeah. Well, so joint role, so IT operations and CISO. So you go through that process of situational awareness and say, right, what have we got? Give me a list of every asset, every MAC address, every IP address. Let's match it. Let's go and do that situational awareness. And we'll call that discovery today. But, for this example, I spotted a laptop I didn't like the look of. And so we made some noise about, let's get that off the network. And the response to that demand was a little bit out of context for me. And that made me dig my heels in further and say, okay, there's clearly something here. Anyway, that turned out to be a laptop that was leaking the data. But I think you learn hard lessons and you have to accept that you're not going to get it all right. But I think if you can follow those lessons, you can't secure what you can't see.
Mm-hmm.
Reaction, manual processes don't work for you, and watch for reactions. That would be my tough lessons learned.
Do you miss your days as a CISO, or is it one of those things that you can only do for a certain length of time and then you need to do something else?
So in many of the times I was multi-hatting, dual-hatting. I was in large businesses, and it's different around the world. The regulators tend to decide what job title you have and what accountability, responsibility you have through some sort of defined matrix. So in some of the roles, I've been the CIO and the CISO, so I have to carry those two accountabilities. Do I miss it? I don't miss being called up at 2 o'clock in the morning and have to dig the laptop out and log in and blurry eyed as you get older. That becomes more of a challenge. I don't miss that, but I do miss it can be very busy. And I think I've always been a person that's thrived on a bit of chaos and a bit of crisis. And I think that's when companies get the best out of me. And as it turned out, I've been through a lot, whether it's data thefts or data centers flooding or trading floors going on fire, or the list just goes on and on. And that's outside of a normal day, which is failed changes, changing market conditions. If you look at the economic climate these last sort of 10, 15 years, it's been really difficult. So no, I don't miss it from that perspective, but I do miss being around that level of intensity and action. But it's I'm going to call it out. It's a young kid's game. So I'm quite happy using my experience to help others. I think I'm better off now.
You've got such a calm demeanor, and I always find it striking that more often than not, when you speak to CISOs or former CISOs, they are seemingly very calm as a collective group. Do you think that is an essential trait for CISOs?
If you've got a large business and you've got a large charge of people to manage, you need to have some structure and some ability to make good decisions because the impacts are huge. So if you're running a core accounting system that's shifting a couple of $1 trillion of accounting flow per day, you've got to be able to be calm and assimilate all the information, ask the right questions, probe the right things, read the people. I think you do need good listening skills. That would be the thing I would encourage, is those listening skills become so important because there's so much information thrown at you these days. And, in a C-suite, as a CISO, you don't tend to have your hand on the tools, right? I don't have my hand on the day-to-day fine detail. So if you lose your calm, I don't think that's going to make life better for your team. But equally, I think you do need to have the ability to turn up the dial as an individual. You do need to be able to get hot and bothered pretty quickly because that's how you make decisions. Right back to the militaries.
Right.
You need people. I've been lucky, right? I know how to react. I've been through enough in my both sides of my career, if you like. I think you can portray calmness, but I do think it's important to be able to react and respond and turn up the dial when you need to get the response you need and get that sense of urgency. I've been in many situations where, as techies, we can get a little bit too much into the detail to figure out what went wrong, when actually all I want is to recover the service, open the bank, get us working again, and fulfill our purpose.
How do all these cumulative career experiences then culminate with where you are now here at CyberArk as director of EMEA Financial Services and Insurance? EMEA, for the folks who may not know the acronym, is Europe, Middle East, and Africa. How does it all land here? What are you doing at CyberArk?
So ostensibly, the role is to start having much more of a vertical, segmented view into how we manage our customer groups. So one size fits all doesn't really good. I think financial services is very complex. Just that term, financial services, it's huge. It encompasses all sorts of different types of businesses, whether that's the really kind of big tier one banks that run global universal banking, all the way through to the fintechs that feed the system and come up with those novel solutions. You've got central banks they are government agencies. You've got payment systems, you've got market data and infrastructure companies. So it's a huge ecosystem. So actually what we need to do is verticalize across Europe, Middle East, and Africa, get a little bit closer to our customers in terms of how do we deliver solutions and partner with them to long-term partnership. So we need to understand their perspectives, understand the world that they work in. And that's what I bring to the table, is that knowledge, that experience of what's it like to be on the other side. Definitely more aligned to the sales side and supporting the sales cycle. But equally, I could be, and today's a good example where I'll be asked questions about specific regulations in a country and how our solutions work or don't work and whether there's a problem, and just try and inject a little bit of knowledge and detail into those conversations. So quite broad every day. So there's a lot to cover, but we have a verticalized approach across EMEA. So I have a peer who looks at manufacturing and another colleague who looks at central government. So between the three of us, we're getting a lot more precise message.
Moving then to something that I imagine you're probably talking with customers a lot about these days is machine identities, like service accounts, APIs, and software bots. They now outnumber, as I'm sure you well know, human identities by more than 80 to 1. And in the finance sector, it's even greater. It's 96 to 1, as we found in our identity security landscape report. What security challenges does this machine identity explosion particularly pose for banks and insurers?
I love the fact that that number is definitely attracting interest. I'm going to argue here that I think that might be actually quite conservative when you start looking at some of those big tier one banks. I'm sure I've seen ratios even higher than that for context, but a lot of those machine identities, they're not background processes. They are the connectors that hold everything together. We're in a much more connected world. And actually, the very nature of banking is about interconnectedness and that network effect. I mean, that's how it works. That's how you and I and our families can go and travel and pay and do all the things that we want to do.
Right.
So interconnectedness, global systems operate multiple countries with discrete controls to operate at scale. So I think challenges are, and the very obvious ones, there's an invisible attack surface that most security teams can't inventory machine identities, let alone secure them. So I think there's a big piece of work that has exploded the last few years. I think there is an issue around cascade risk. So what I mean by that is the fundamentals of banking is about payments, right? Inbound and outbound. And one payment instruction, when you pay for your goods at a point of sale, there are dozens and dozens of different machine identities that are going to get involved to allow that transaction to go from a merchant through whatever systems. I mean, dozens, right? I could list them off. We could be here for a while. But you go through all those systems. They go all the way through the payment rails, all the way through the central banking system, through the liquidity engines, and they go traverse all the way through another business, and then all the way back down as an acknowledgement. So that cascade risk is actually quite large. I think there's a big scale mismatch as well. So we do spend, and we have spent, huge amount of money historically protecting human access.
Right.
I definitely remember days of engineers. You do a lot of work out of hours when you work in technology in a bank because you can't really touch things during the day, certainly in the cap markets type business. So you've got engineers walking around with sheets of paper with usernames and passwords on. Just thinking about that is, so again, back to that point about removing, we've got a lot of machine IDs that operate in shadows. We want to remove manual process. We need to reduce the amount of touch points. But I think often the first question I would ask, and I mentioned this before, is, who can go in and touch databases? And that's what we've got to, that's the sort of thing that we've got to manage, whether it's part of your discovery set or it's something you know about and you've chosen not to do anything about it.
You've talked about treating machine identities as first-class citizens in security. What does that mean, and how can organizations get a handle on it?
What it means is identities, we want identities to get the same systematic attention as human identities, right? We're all very good at labeling the person, and we're all those kind of attributes, and it's very easy. We need to do the same. We need to treat identities as first-class citizens. And that concept is about ownership, life cycle, how you manage the life cycle of that identity. How do you monitor? What's the governance structure? And I'd argue, I'd go even further and say, at what point do we start looking at identities and doing a performance review on them in the same way we have a performance review at work? And I think we probably do need to do that anyway, but it's about thinking about it differently and treating them just like humans.
It's a lot of performance reviews to conduct.
Well, you can automate it, right? AI, this is ripe for it, is to be able to start looking at how does AI learn from what it's seeing? How do you write the rules? How do we exploit? It's a game changer.
Mm-hmm.
But I think that's where we're going to have to go. So I like that idea, that notion of first-class citizens is a concept we need to start thinking about it differently.
So then what are some immediate steps organizations can take to address the risk posed by unmanaged machine identities, especially in financial services?
So back to my point earlier, situational awareness is key. So you can't secure what you can't see. So you've got to start with automated discovery, be more curious, which is great, easy to say, but my experience, your security people in the teams I've worked with, they are curious. Sometimes we call them the Ministry of Business Prevention, but that's because they care. And, I've got many, many examples where we've stopped bad things happening, but I think be more curious. There's still lots of forgotten identities, API keys from old projects or expired certificates, and certificates another interesting subject. Definitely have a look at assigning ownership back to that first class citizen. Assign them ownership. Every machine needs a human person accountable for it. Now, how you divvy that up, I think the quick win for me would be go and have a look at your dormant identities that suddenly become active, right? Now, then there are many ways that you can monitor that. But if you could go and find your dormant identities, is that one that sat there, done nothing, and suddenly pops up and starts working? Now, in the world of financial services, there are reasons why that might happen. And because we work in monthly, quarterly, half-yearly cycles and reports, and there's lots of work that has to go to the regulators or to different parts of the organization to look at how the performance is going. But I think there's sometimes that's often your first sign of a compromise. So there's three kind of good steps that you could take straight away to start looking at it.
Let's talk about AI and financial cybersecurity. AI is often described as a game changer and a potential risk amplifier in financial cybersecurity. How is today's AI different from the machine learning banks have used for decades? And why does it require a new approach to risk management?
I think it's really important to make a key distinction here. So traditional machine learning, being around, been playing with that stuff for more than 20 years, more than 25 years probably. Machine learning is very narrow, somewhat contained by the data sets that feed it and manage it. So typically the use cases were risk scoring. We could look at things like market risk and product risk because they're two different things. We could look at analytics and specific use cases for a desk. So they can look at data and pull that back and look at historic tick data, for example. If you've got a client on a line on your 32-line dealer board and you've got 10 panels and KDB systems pulling back terabytes of data, instantly that phone goes. Machine learning is great, right? It knows what to do. And you can use your quant analytics and your algo trading systems to drive those conversations. So that's the distinction of machine learning, right? Today, it's very different. It's much, much more expansive. It's much more autonomous. AI agents need to start looking across all those different silos inside a company to make those complex decisions and often act without human intervention. And this is distinctly different from the automation of batch files and processes that have sequential processing. Mm-hmm. An example I'll bring it to life a little bit is around compliance. So compliance and the use of AI, those agents would need to access just about every type of transaction and all the different behavioral analytics and the profiles and the threat feeds and all the different vectors to be able to then pull the picture for you to be able to do something with it. There's a competitive advantage to be able to build agents to do that. And AI, agentic AI in particular, it is a game changer. It is going to make a difference for those that learn to exploit it safely with the right level of control. But AI systems they need a lot of access to the right types of data. And we've been, historically, we've all had our challenges with the types of data and trying to figure out how to get the best out of it. But that makes us high value targets, and what you do next then becomes critical.
Staying on the agentic AI thread for a moment, you'd mentioned compliance. What other areas do you see as the most challenging or risky when it comes to agentic AI in finance?
So I'll go back in my experience and where I started. My career was on the trading floor, securities, equities, and treasury cap markets. So those are probably the ripe areas for exploiting this. So trading systems, direct market access, split-second decisions. We're talking nano response here, not micro. Time pressure.
And what do you mean by that?
So the way the market, so there is something called a FIX, the Financial Information Exchange, and that's where you can actually load up your screens and execute on an automated schedule. So those can happen in nanoseconds. Mm-hmm. And they are basket trades. So you could have 50 trades going in at the same time because you want to take advantage of the way the whole mechanics of the markets work. So you've got time pressure. You can only trade for a certain amount of time per day. You've got market pressure. You've got other aspects like you start the world with Asia, and then it goes to Europe, and then it goes to London, and then there's a big gap before New York opens at 2:30. So New York opening at 2:30 is where you could start building a massive headway into market trading and getting better outcomes because you've seen what's already happened in the rest of the system. I think things like credit assessments are really important. So giving an agent access to customer data and all the regulatory implications of data, things like GDPR and Privacy Shield, we know all about that. And then the last one is around compliance. So compliance to either your internal compliance frameworks or your regulatory compliance frameworks linked to your license. And those are, could you imagine giving broad data access and having to manage the regulatory reporting authority for intraday? But I think the key risk here is really around giving an agent, AI, agentic agent with trading authority that could cause a market disruption. And that would happen or could happen in seconds, not hours. And that is terrifying thought. That's the real risk that we need to manage. I think coming back to other types of financial services, retail banking is typically slower. There's more friction in the system. There's more volume. So it's going to affect people in different ways. But I think trading, cap markets type businesses where you are in the market and trying to execute quickly for either individuals or institutional clients, that's where it's going to make a difference.
All the sensitive data, obviously high value targets for attackers. What steps should or can organizations take in the next foreseeable future, so the next few months, year, to make sure their AI systems stay secure and accountable?
So the most important thing is to not treat AI like a black box. You've got to be able to kind of pull this apart a little bit. So I think the immediate priorities I would advocate are around inventory access patterns. So can you map what data each AI system touches? Yeah, end to end. There are lots of tools that can help you look at data flow and API flows. You could look at some identity governance. So treat systems like privileged users, right? Treat those AI systems like first-class citizens. I think monitoring and building monitoring for behavior is going to be another really important aspect. To be able to detect when AI systems act in their normal behavior pattern and outside their normal behavior pattern, if that's what you set them up to do. And then I think ultimately there's a human oversight checkpoint here, which, believe it or not, we're still going to have someone paid to build frameworks and pour through data and look at what are the critical decisions that a human needs to go and then validate. But there's a few things. I mean, so none of those steps I imagine would take you, they're not quick. They're going to take you time to establish, but that's the start point.
Do you think agentic AI is an identity security problem?
Yes, I think agentic AI is an identity security problem. AI, whether it's on the machine learning side or generative or agentic AI, whatever you look at, we are asking systems to go out and do complex work on behalf of what historically was automated work, right? So we're going to go deeper, we're going to go further, we're going to do it quicker. And you've got to be able to track that. And you can only track that if you know the identities. So if you've got an agentic system that can generate new robots or generate new agents, like you can't help that freewheeling. And I think the other aspect is the regulatory frameworks right now. They are very clear on you must have control of them. So in order to have control of them, you've got to be able to identify them. So you get that full loop.
Moving over then to privileged access and what you've referred to as the privileged access paradox in financial services. How does it play out in banks' day-to-day operations? And what is the privileged access paradox?
It's a real challenge for us for the here and now. So financial institutions, large and small, they are caught between two opposing sort of problems here. So they need solid privileged access controls to meet those regulatory compliance requirements and the risk management, but they also need speed and agility. And this is the paradox that everyone's going through: is how much control, permission, ability do I give something versus how quickly they can then go and do that. And if it's done well, we'll get good outcomes very quickly. If it's done poorly, we'll get bad outcomes very quickly. And that's where the risk reward becomes a problem. So a couple of examples I could probably bring to life here. So the first one is a trader on a trading desk needs more access than your normal person in a bank. They write their own code, they manipulate data, they execute trade flow, but they need instant access to execute time-sensitive trades. The security team doesn't want to give them that access because it's wide access. Now, there's your challenge. I've got to trust people, but I've also got to put the right amount of control around it. So we can give them the right access and allow them to do their jobs very quickly. We're happy, customers happy, the market's open, we've done what we meant to do. If you think of it from a DevOps, I think DevOps is a great example. We went from a day where we had just developers, we had operational people, and we put the two jobs together. We've given them a huge amount of access. We've given them tools that allowed them to build entire environments with a few lines of code. So we want to give them broad access to system to do stuff really quickly, but that creates a massive security exposure, potentially, if you have compromised accounts or I've had teams that have compromised accounts. I've had teams that have spent an entire quarter's worth of budget building stuff that we didn't really need because they were just giving it a go. And so compliance investigations and compliance officers will need even deeper access to go and investigate any of those issues where that goes wrong, or even just to validate that was a good execution of a good trade that might have been outside of the normal strategy for the day.
That brings to mind zero trust. How does zero trust factor into how you're thinking about all this? And then how can emerging tech like AI, bringing it back to AI again, help solve the privileged access paradox?
It's a good start point, isn't it? So, zero trust. So that's the paradox, and we're going to have to work our way through it. You learn and you get more granular about the level of access that you want to give. So you start with zero trust, and then you just open that up for as far as you want to go. You're going to have to be principle based. It's going to have to be dynamic. We're going to have to respond quicker. We're probably going to have agents that allow you to allow those permissions to actually execute what they need to. So it's going to come a full circle, but the right thing to do is to get those steps in place, get the governance in place, make sure you understand and document the limits that those agents can work on.
You mentioned dynamic. What role does dynamic access management play in making all this happen?
Yeah, they could be the mediator. If you can make real-time decisions based on, give them context. So risk, business needs, market conditions, and allow AI to be that intelligent mediator to make its own decisions. We've always been quite binary. So rather than having something that's always yes or always no, we're going to have to start moving towards something that is yes, but under these conditions for this amount of time, for this additional context, and knowing when the end is. But again, that's not new. We're just taking it that next step in terms of allowing those agents to be the mediators of what they need to do. So again, get the context of how dynamic you want them to be. Make sure there's an element of being time-bound. Calling it risk-based is not so easy, but I think I go back to behaviors. And so what does normal look like? What does good look like? What does abnormal look like? And start looking at what point do you want another set of controls to kick in to start saying or throttling how much exposure. But, with the time-bound ones, for example, you could look at that in terms of how would you pass off from a trading desk in Asia to Europe to the US? And agents would be very good at knowing when someone is doing something out of the norm and being able to kind of shut down certain parts of the system. So that's a dynamic bit is, intraday, things happen very quickly. A trading floor is very much driven by what is going on in the whole world, and you're trying to get ahead of that where you can or respond to it quicker than everyone else.
Moving into strategic and practical advice, what's the first step for financial institutions just starting to tackle machine identity and AI governance? What quick wins can they focus on over the next few months?
Yeah, and quick wins, 6 months, 12 months, you can't argue with data. So get that discovery done. I think you've got to automate that discovery, keep it running, build the profile so you can understand what changes and figure out how do you map your machine identity landscape. I think that's going to be the first part. Most organizations find more machine identities than they expect. And, we've proven this actually because we have a value assessment process that we do, which normally attracts an awful lot of attention from C-level when we start showing them the amount of dormant accounts or dormant identities or identities that have never been used, but they've spent a lot of time setting them up. So there's a lot of low-hanging fruit that you could go after for that immediate impact.
As I'm sure you well know, it isn't easy to get buy-in for security initiatives. How can security leaders make the case for things like machine identity, governance to the C-suite and the rest of the business?
And the short answer is there's no single one way of doing this. You've got to frame it in lots of different dimensions and perspectives. So generally, within financial services, you are always looking and thinking about those three aspects of operational risk, systems, resilience, and organizational resilience. So you're looking at those three. So I'd frame it as operational resilience, not just security. I think that's a kind of easy one to go after, and people are better at doing that these days. There's lots of examples that you can point to where a single compromised machine identity can just stop a trade floor in its tracks. It can create a data theft that cripples an entire organization. And the reputational aspects of that are worth always putting forward to say, frame it as an operational resilience, and it's going to enhance that posture. Regulators like that language. Demonstrate how that single issue could actually compromise a wider issue and damage your business. And then, ultimately the reputational damage, which, having been through a data theft myself, that can take a decade to repair. So you've got to use language. And the big part of my day job now is just helping us use the right language and those matching principles of what does a CFO want to hear about. They might want to hear about return of investment and ROI. You've got to be careful with that depending on the time of year. So you can talk about cost avoidance. You can use great language around competitive advantage, particularly when you're talking with product people. I hear the term heavily regulated a lot, and that doesn't do it justice. I'd argue almost every single business is under some kind of regulatory burden. But I think in financial services, if you can paint the picture of regulatory readiness, and that will position you well for managing current compliance requirements and future requirements and being ahead of that game.
I'm glad you mentioned regulations and regulators, because with regulations like Europe's DORA and the EU AI Act starting to address AI and machine identity risks, how do you see compliance requirements evolving, and what should organizations be doing now to stay ahead?
We've had vendors and third parties that have caused problems, and you've never really been able to hold them account other than underneath the contract that you have with them. So I think there's some evolution recently. DORA is, the requirements or the operational resilience requirements include testing, specifically talk about ungoverned machine identities are operational risks. So the language is really clear, and same with the EU AI Act is those two examples. And I think it is important to just point out those are laws. And if you break the law, you go in front of a judge.
Right.
If you breach a regulatory standard, you go in front of a regulator and you could get fined. And then you've got standards, and then you've got codes of conduct. So they all have different purposes, and they all attract different level of scrutiny and censure if you don't break them. But I think the regulators specifically address third-party risks in DORA. And machine identities are how you connect those points. I'm happy there's some more stringent and more EU-wide type regulation coming out. So you don't have to be too selective. It's one set. But things like the EU AI Act, that's not easy to say. I think there's a lot of preparation there to start classifying your AI systems, right? That's already a mandatory requirement. You now have to look at that by risk level, building audit trails for AI decision making. So we've got a lot of work to do around documenting your model risk. What does it do? How does it work? Who owns it? How does it get reviewed? How is it monitored? And there's another regulation coming called Cyber Resilience Act in the EU. Again, that is going to require us to have even more information and pass even more information to regulators across anyone that sells any kind of digital product. So there's a huge evolution of change. I think it's good for consumers. That's the most important thing.
Banks are often quick to test new technologies, but slow to roll them out at scale. So what do you think financial institutions can realistically achieve in the next few months when it comes to AI machine identity governance?
Yeah, I think that's definitely been my experience. Banks, there was a great example. I was talking to someone about this the other day where, the talking heads and someone said, we could actually feed the talking heads to do work and marketing assets for us. And I remember I could go back to 2001. We were playing with it then. So we haven't really come a long way with some things, and there are things that have accelerated. Banks have budgets, ring-fence budgets. They have sandboxes. They have labs that allow them to go and look very quickly and test new technologies. But you're right, they are slow to sometimes put that into a productive environment. My experience has been getting stuck in POC purgatory.
What purgatory?
POC, proof of concept.
Okay.
You can have dozens of proofs of concept running at the same time, but they never really convert. They never go anywhere, and you just get stuck evaluating the same thing.
Mm-hmm.
Will we get to full transformation in the next 6 to 12 months? I don't think so. I think we'll get meaningful progress that might create some sort of immediate value, but I don't think financial institutions are great at pilots. And the challenge for all of them, like I said, is scaling beyond that proof of concept in a meaningful way. We have to wait for consumer demand, and we have to get consumers comfortable with the level of agentic economy regulators are always very careful so I have to articulate this the right way, that they're not very good at saying yes, but equally they don't say no. So you have to read between the lines in terms of what you're doing. But I think the next 6 to 12 months, we're only going to get in the same way with generative AI. I think it will be on the lower end. And then as people get more comfortable with it, it will then accelerate. So that's my wisdom.
Do you think getting machine identity security right actually could become a competitive advantage for banks instead of them being seen typically as, or historically as, slow movers, slow to adopt?
Oh, yeah, absolutely. I mean, those that invest, and I've seen this with a few clients that we're working with now, the sooner that you start looking at this and working on real use cases. So let's not talk about security. Let's talk about the business value that it's going to bring. And we can stop that slow moving narrative by partnering with and making identity part of that business advantage. So that's exactly why early movers will have a significant advantage over others, whilst everyone else is still figuring it out. So those advantages they're going to come in the form of better operational resilience because everyone's under more scrutiny now, faster innovation. And innovation is business innovation, not technology. So it's not getting more gadget. It's turning your business processes into something that's more innovative.
Okay.
Getting ahead of regulatory readiness, and we talked about that earlier. If you can get ahead of compliance requirements and do that, this is the military bit coming out. Is like, what is that what if? What's that what if moment, right? What is the next problem that we're going to get? And then I think ultimately market confidence, right? So the large banks have people that want to invest money with them in the form of savings. Those deposits become money that banks can then lend, and there's your whole ecosystem. So the more confidence that you have in those systems, the more people are going to have deposits, cheaper cost of capital, right? And that's the banking bit coming out in me. But institutions that can demonstrate proactive security in that and build confidence, identity is absolutely the way to go.
Final question for now. We'll come back to you, Andy, because there's a lot to talk about in this realm. What does success look like in the near term for financial institutions that embrace AI and machine identity governance? What milestones should they be aiming for?
I've got a crystal ball moment here. So I think moving from a reactive posture to a more proactive governance and being able to prove to the regulators and auditors and risk committees and audit committees who are nervous about this, but not objecting, but they will be nervous about that. So I think success will look like, how do you move from that reactive posture to a more proactive governance stance? And I think what you do next is around inventories for machine identities and using a value assessment where we can uncover the truth of what's going on, get those critical machine identities and have defined owners, defined expiration dates. Beyond that, you could start looking at, how do you automate credential rotation for non-critical systems? So start there. So there's less of a impact if that doesn't quite work the way you want it to. And then I think, further out, 12 months out, maybe I'd like to see AI sort of anomaly detection for machine identity behavior, truly established, where you can, and we are looking at this carefully, to not have hundreds of thousands of false positives to look at, because that's a resource drain. But we do want to train models to be able to look at anomaly detection and have a meaningful reaction to that helps you progress your business rather than stop it in its tracks.
Andy, now that we've taken up a substantial portion of your evening, do you plan to be reactive or proactive with the rest of it?
What am I going to do? Have food. So I ran an ultra marathon on Monday.
Wow.
And my feet are a little bit sore. So I'm probably going to go and put them in an ice bucket.
Okay.
And eat as much protein as I can.
That sounds like a good idea.
Yeah. Eat as much protein as I can. It's a hobby, but I'm going to call it a proactive reaction.
Andy, let's get you to that ice. Yeah. Glad to hear that you're being proactive in your personal life as well. And thank you so much for coming on the podcast. Really appreciate it.
Absolute pleasure. Thank you very much.
All right, there you have it. Thanks for listening to Security Matters. If you like this episode, please follow us wherever you do your podcast thing so you can catch new episodes as they drop. And if you feel so inclined, please leave us a review. We'd appreciate it very much, and so will the algorithmic wins. What else? Drop us a line with questions, comments, and if you're a cybersecurity professional and you have an idea for an episode, drop us a line. Our email address is securitymatterspodcast, all one word, @cyberark.com. We hope to see you next time.